Hey, everybody, come on in, make yourselves comfy. We will start in a couple of minutes. You will need to take notes today. I did not prepare slides for you intentionally, so you have to pay attention and write notes and ask questions because I'm literally going to core dump on every one of these setups with thoughts. It will be your responsibility to organize those thoughts today. You could do that too. Joey says, watch and take notes on replay. You could do that. The thing is, since we're not live market, most of the meat today is actually going to be in what I'm saying. I'm not going to have too many opportunities to show it, except looking at static charts from the past, which can be illustrative but not demonstrative for you English majors. Okay, let's see. With the momentum definition, yeah, you're already overthinking. I don't know the rest of the question, but can we put into physics terms to understand this? Is that how the algos game it? Yes, you're overthinking it. Algos game it any way they want, which could be 100 different ways. There's no, people think that, algos are a thing, like they all hang out and have a beer after work. It's not like that. The vast majority of algorithm, and definition wise, let's be clear here. Let's just call algorithms automated trading, because the vast majority of them don't just turn themselves on and off. There's somebody running them, and then they do execution. So let's remove algos from the vocabulary because it's misleading, and just think about it, David, in terms of automation. And there's a million ways to automate anything. So there are momentum bots that buy and sell momentum. You can see them real time. And they have different tactics and strategies that they use to execute. Since I'm a scalper primarily, I'm always watching for behavior that looks to me like automated scalping. Okay, and automated scalping is real easy to see. It's dependent on the price action, and it's really obvious if you know what you're looking for. If you don't know what you're looking for, it just looks like price action, and that's kind of the key to everything. Is not trying to think in terms of that's an algo, but just watch the behavior, and think about all the different kinds of players there are. That's a better exercise mentally, David. So, there's the vast, giant institutional guys who are putting on trades with months of time frame, and with little regard for whether the entry is at this tick or that tick, and they're often hedging against portfolios of other instruments. So what they're doing with respect to momentum is not very important to you. But if you see, the ES trading in a range back and forth, and when it gets to one end of the range, all the bids are 20, 30, 40, 50. And when it's at the other end of the range, they're 200, 300, there's a clue in that behavior. The volume is buying on that side and not selling on the other side. And so what algorithms typically do, or bots, is they just capitalize on that ebb and flow. And Lee's example is a really good one with the zero. There's some conversation going on this on the Slack. When you see zero prints and stops getting run, that's my favorite setup to fade. So literally, I'm going the opposite of the entire market when I do that. And that's because the bots that we're talking about here, the algos, the automated strategies, push those stops. They see it coming and they jump in front of it and they jump into it, which makes it a self-fulfilling prophecy. So the retail traders typically see that and come in after it's over. And so the trick is seeing when they're done and then fading that. That is my 99% winner for scalping ticks. If that's what I'm doing at ledges, for example, which is where it's common, I have a 99% win rate because it's just real easy to catch those. just don't overthink it, and don't say, well, if I got 1 tick, I could get 5 ticks. All of that stuff's wrong. The right answer is the odds are overwhelmingly good for a tick at that spot. So that's what you need to be doing. Okay, would I say semi-auto? Kawika's asking me. Not really. Semi-auto kind of puts me in the idea of fully automatic versus semi-automatic weapons. One fires more bullets at a time per trigger pull. No, I don't think of it that way. I think of it as if I'm a portfolio manager running a portfolio strategy that involves a lot of bot tactics, like a really good one would be the one I mentioned in New York that just basically plays all of the retail technical spots. They just fade them. That's all they do. And if you look at that, it's not auto semi-auto. It's they wait for that to happen, and then they flip the switch and turn on the bots, and the bots execute, and then when they're done, they turn them back off. So it's auto when it's running. It's running or it's not. It's not semi-auto. Hope that makes sense to your question. Let's not use words like absorption. That's absorption's meaningless. What does that mean? Okay. And that's the trouble with all those terms. Unless you have a definition that everybody agrees to, it doesn't make any sense. So, I use very simple approaches to those terms. Buyers or sellers. It's that simple. Get out of this idea of absorption or support or resistance. If buying is overwhelming selling, then you will have movement in the direction of the buying and vice versa. And trying to use definitions for it is just an exercise in definitions. Okay, let's see. Let me go back to the rest of these questions and then we'll get started. Amy says the what is more important than the why or the who. I don't know that I would agree with that. For me, it's the what and the how. So I don't agree with either of those. I agree with you. The what is more important, but it's the how that matters. The who and the why don't. That's why news is irrelevant. I don't even look on Friday when we did the live NFP. I didn't even look at what the number was because it doesn't matter. Okay, so Jack says, is the velocity of orders that indicate algo? No, it indicates velocity of orders. Okay, let's see. These are great questions, by the way. Yeah, what Lee said to you, Jack, algos are active when what they are bots for is a strategy that will work. And when you frequently, for example, in price discovery, all the algorithms that you guys are talking about, all the bots get turned off because they don't work. Nothing works, and so people that are trading that are trading discretionary extremes, and there are algos that trade extremes. I know a very particular one that takes it's an FOMC bot, and it takes the extremes and uses a formula against them for both the rest of the FOMC session and the next day. A friend of mine's used it for 25 years. Works pretty well. But my argument when I see it is that I could do the same thing by just watching. And he has to constantly tune the numbers for that algorithm. So anyway, which is true of all of them, by the way. Automated trading has to constantly be tuned. You don't just build it, forget it, turn it on, and it works. Okay. Let's see. I'm reading The Sopranos. Okay, I'm not sure how The Sopranos fit in, but let's see. Okay, Michael, if you don't want to use the word absorption, how would I describe the end of an algo stop run? Less buying. Kawika, I've been semi-auto because it gets turned on when it gets turned off. Yeah, it's either on or off. So it's auto or not auto. It's not semi-auto. Yeah, most people that code, David, his question is this friend a mathematician? Most people that are involved at all with coding markets are math oriented. Ali and I, what's the definition of a mathematician? I mean, I have an undergraduate degree in economics and statistics, and B school, never actually got the formal MBA degree, but I went to the B school at UCLA, and I have the requirements to do it if I wanted to. And God, half of that program was applied math. And, as an econ undergrad, I filled all the math. So am I a mathematician? I don't know, but I code. I've been coding since I was a kid. So those two things together, I think, is how people that are algo traders or that desire to build those kinds of tools think. And I think Lee's a really good example of that too. Lee, do you have anything you want to contribute to this conversation before we get into the setups? I think it's a great conversation.
Maths background, not really. It blows my mind, but I did do my degree is in computer science, so I guess I can think procedurally. And there's been some discussion on the Slack today about how would I get into developing the algo, or a bot. Let's say a bot. I think if you don't have coding skills or experience or backgrounds, you are really going to face an uphill battle. You first need the ability to turn into code the idea you have, then you need the domain experience around the idea that you're looking to implement.
That's a great point. And that conversation is very interesting. I was reading that too and commenting a bit. And I believe it's Scott. I don't know if Scott is here. Let me look at the list real quickly. I don't see him. Oh wait, there he is. Okay, so Scott is here. The idea to be able to create those kinds of tools as a coder and a trader, you have to be a really skilled trader, and you have to really understand the market. Number one, and then number two, like Lee said, you got to have enough skill to be able to represent that idea in a computer model. You're much better off if that's what you want to do. Becoming a really good discretionary trader around your ideas and then hiring someone to code them for you. This question, Scott, often comes from people that have been reading these posters that I've got my automated strategy and I'm up, 9,000% last year and I don't do anything, and the key thing to remember about any automated strategy, and this is a really important point, is that it only works in the conditions for which it's automated. And therefore, you have to have a collection of them and know when to turn them on and off. And guess what? That's learning discretionary order flow. And once you can do that, you have a lot of options as to what you do with your tools. But what Amy's saying is true. There's a lot of nonsense out there of people selling garbage that supposedly does this. And a good place to check that stuff out is there's a site where people license bots called Collective 2. And I would encourage you guys to check that out. But this is all, it is foo nonsense. And you hear people posting, my automated system is doing X, Y, and Z. Yeah, maybe in one set of conditions, and maybe that was the conditions for the last 9 months. But beyond that, it's meaningless. And so, but it's a common rookie trap to fall into. That God, if I could just take emotion out of the equation, I know Jerry is going through this right now with respect to his combine trading results versus sim results, which should be the same, but they're not. Guess what? This is hard. It's an emotional game. So you have to really master the setup stuff before you even try to master your emotions. Otherwise, you're going to just be all over the map. So let's use that as a segue into today's presentation. First of all, welcome everybody. This is session 3 of ESP. We are not going to do a slideshow today. We're not going to do anything formal. We're going to dive into this. If you haven't come to the first 2 sessions, some of this might go over your head. Their recordings are up for them, so I'd encourage you to go back and watch if that's what you need to do. And they are in the library. I'll just show you where real quickly if you're new. Sometimes navigating stuff is hard to find. Go to the members home, go to the library. We're getting really clever at naming things, so you can find them easily. That Lee and I have worked very hard to do that. So like ESP, is kind of easy to see, and we're also tagging them. Anyway, there's the first 2. If you want to do that, I would encourage it. Okay, so with that in mind, we are going to spend all of this session and the next one, and hopefully some live time in between somewhere, just talking about the setups. And I've struggled to come up with a good word for what I'm going to say about them. So I'm going to explain it this way. We're going to look at setups as opportunities. So these over here are the opportunities that I'm talking about. So let's just highlight that for a moment. So that's what we're talking about, is these individual items. And it's hard to do what I want to do because they often occur at the same time. They occur under a lot of different variables. And your first approach as a trader is to try to figure out all the variables. And I used to do that. And I could show you processes going back, gosh, 10 years with flowcharts and all the variables and if then logic, if this variable says that, and if this, metric is greater than this, and I've literally tested this over tens of thousands of live trades. And the conclusion that I came to is all of that stuff is great, but it's not required if you can boil it down to the pieces that really matter. So that's what I'm going to try to do today for these setups. And we still have another whole session. We will have a live session in between. I just haven't scheduled it yet. And keeping that in mind, also understand this is a core dump from me. For those of you that aren't computer people, a core dump is literally taking everything in memory and just giving it back, dumping it out onto a sheet of paper or a disk, or in this case, a Zoom presentation. So I'm going to just, tell you my thoughts and how I came across these things and how I do them, and we'll talk about them. And we may not even make it through all of them today, and that's fine. Okay, let's see. Okay, back to the idea of momentum that David was asking about. There's 2 points about momentum that I want to make that are pertinent to this discussion. Number one, by definition, if you're going one direction, even if you're doing it slowly, there is some degree of momentum. So, if you think about in terms of vehicles, if you're walking, you have momentum. Maybe you're going 3, 4, 5 miles an hour. And, if you're a car, you have momentum, et cetera, et cetera. So if you think about it that way in terms of price action, it's a little easier than it is to try to quantify. And it's literally a continuum. There's no absolute numbers for any momentum in my view. And HMOMO in the middle of the night can look a lot different than it can in the open 5, but it's still what I consider to be HMOMO, and I treat it the same way. So that's kind of the framework I'm going to operate from. Please ask questions, because when I do this kind of a session and I can't see you guys, I'm measuring what you're absorbing by questions and comments. So feel free to make them good, bad, or indifferent. And lastly, I am going to try to pull up charts now and then to look at an example of what this would look like on a chart. But it's important to understand that I don't trade from those, and I haven't for a very long time. For me, they are nothing but context. And one of the things Lee and I discussed last year when I was doing the workshop, and he and I were collaborating on a couple of things, was that to some extent doing the workshop last year made us go backwards in our thinking, because we had to constantly go back and explain things in terms of charts that we don't use. And that's a challenge for a trader, when you get to a certain point and you've abandoned something, to go back and explain it in that format to people that are still at that step. So keep that in mind as we go through this, and it will be easier to see some of the things live than it will be here static, and some things will be easier to see static. Don't feel lost if this doesn't make sense to you the first 3 times you see it. It's not easy stuff to always absorb right away, and there are levels of depth here, and that's a critical understanding point when I talk about tabula rasa and blank slates and approaching everything with an open mind. It took me a long time to understand that comment, that there are layers to this stuff. I'm a reasonably smart guy. I'm reasonably well educated. I've been around. I've got a reasonable life experience base to deal with. So, I consider myself a decent critical thinker. And yet 4 or 5 years ago, some of the layers that I'm talking about here that I will explain that I now see, if I had tried to explain those to you 5 years ago, I would have been just worthless, because I didn't understand what I was seeing. So give yourself a break and forgive yourself a little bit along the way, that not everything is going to make sense today, and it may not make sense 5 months from now. But that's kind of the beauty of doing videos and watching them again in the future. And that was kind of the way I realized all the layers was, I would like watch a video that Peter Davies did at Jigsaw, and I would, I just don't see what he's talking about, and then I'd go watch what maybe John Grady was doing, or some of the Axia guys, and I'd catch an idea. And then I'd go back and I'd look at it again, and then, I'd be teaching somebody else, and in the process of explaining it, a light bulb would go off, and oh, now I get that. So this stuff comes in waves and layers, and if you don't accept that and allow yourself that luxury, this is going to be nearly impossible to learn. So I will leave it with that, and I will look at the questions again for a minute, and then we will hop into the setups. Okay, so David, we're still on this momentum question, and I get it. Trying to determine HMOMO in the day doesn't make sense after 7 months. That's cool. It didn't make sense to me right away. Let me tell you a great story about HMOMO. Okay, so I've told you guys this before. I live in an area that we have a big university here and a couple of private colleges, and one of the best, largest city colleges in the country, and Santa Barbara City College. And so great college town. And one of the things I did from like 2014, 15, 16, I think, was I drove Uber, on the evenings and on the weekends in the morning, when all the kids were going home from their parties. And I had a lot of very interesting conversations with people. And one of the advantages of doing Uber very early on weekend mornings is I also frequently got runs to the airport, which is Los Angeles International, or to the community airports in the one in Camarillo, where many of the rich folks that live in my area here in Montecito keep their airplanes, because Santa Barbara has a very small airport. So I was driving some very interesting people, and one of them was a very successful, very large hedge fund manager who lives in Montecito, who I do not know. And he has no idea what I did. To him, I was just the guy driving Uber. But I was telling him a little bit about the algorithms that I work with, and he was, humoring me because, I'm just the Uber driver, right? And, asking a question now and then while he was on his iPad. And it's funny because when you're in a situation like that where you know who the other person is, but they don't know who you are, and you can be stealthy, it's always a lot of fun. So, I could play really stupid. And anyway, so I was explaining to him how I deal with momentum. And he's like, well, how's that different from any other momentum indicator that anybody in the market trades? And, I thought about that after he asked me that, and we were driving. And after thinking I said, well, let me think about that. Again, I was downplaying myself, number one. Number two, this was a pretty sharp dude, and who knows? I've had Uber riders I ended up doing business with, and I've invested in companies from college students based on, they were my passengers. And so I didn't want to push this too hard, but I said, the simple answer is that it's in context. And the guy put his phone down, and he put his iPad down, and he said, what does that mean, momentum in context? I said, well, momentum at midnight when I'm trading oil is very different than momentum when New York opens. And he said, yeah, but there's 100 indicators for that. And I said, yeah, that's exactly what's wrong. The indicators show you the momentum after the fact. And what I do is I measure it as it's happening. And we never really touched base after that. He ended up seeing my Surfing the Markets group, and he emailed me once or twice with a question, but he's pretty much retired and an older guy. But I thought that was very interesting how a very successful, wealthy Wall Street mind couldn't divorce himself from the idea that momentum was an indicator at the bottom of your chart. And so my moral to that story, David, based on your question, is that HMOMO is not going to make sense after 7 months. You have to look at all the different layers, and there's that layers thing again. And then you have to constantly go back and practice what you learn to see. It's pattern recognition at the very simplest. That's what it is. Let's see. So Kawika, when I abandon things, you know what? I'm really good at testing, Kawika. So the answer to that, your question is, when I say I've abandoned things, and some of them, is it just subconscious that I'm still using them, but I've reduced the task load? No, I'm deliberate about this. So for example, this process, which is, the one I was using 2 months ago, I could not figure out how to quantify this element right here. This has been the number one issue with all of my setups for the last 5 years, is quantifying those things right there. And in the transition to this one, I said, pardon my French, and if your kids are listening, cover their ears, Maria, fuck it. Why do I need to quantify it? To some extent, I should be able to figure it out through this funnel. And remember, this is a funnel approach You know, I'm funneling down these things to get to here. So when I talk about it, I will address that. But that's a really good question. Okay. You could always use market replay to show examples. No, market replay is a total waste of time, Christine, because it's showing me the past, and I was there or I wasn't, but it's not realistic. You have to be in the heat of battle with news happening and the events that are hitting the tape coming in without any precognition of them, and that's just not possible in replay. So, you know, bless their hearts, the Furus love to sell replay, but replay is useless. My opinion. So is back testing, by the way. Okay, what is POT next to green light, red light? Pace of the tape. And this is something I just added to this. I had talked about it, but we will address that along the way. And by the way, these are all great questions to kind of get us warmed up for this session, so keep them coming. And that goes right into our momentum question, doesn't it? You know, the price action can be ebb and flow, you know, with the pace of the tape looking very different than ebb and flow might look overnight, compared to ebb and flow, you know, an hour into the regular session. So, so that's why I put that back in. That is something I've used in the past, and I put it up there as a reminder to teach it to you guys. So, okay, is the live time in between? Yeah, Clay, that will be recorded. We record everything, always. Okay, so let's see. Yeah, what Lee said, if you record and store market depth and your platform can replay all that, and you can divorce your brain from any economic announcements that might have happened at that time and the day you were trading, and if you can get rid of all that, replay has, you know, maybe value. But, you know, that's from my point of view, that's a pretty pathetic list of prerequisites. You know, do it live. Okay. Recording your trading and going back and reviewing your stuff is really useful. That is not market replay. Market replay is going back and replaying previous days, which in my opinion is useless. Okay. So next question, David said, will HMOMO is a type of price action? No, it isn't. I'm looking at the list of price action. I see ebb and flow. I see price discovery. I see HMOMO. Yes, it is. Whoa, let's see here. So wait a minute. There's a conversation going on here. Well, wait a minute. Is it one of those or is it not? And the answer is it's both. A setup and a price action, and the type of price action I'm referring to here versus the setup I'm referring to here are two different things. And that's why the setup is called HMOMO and the price action is called high MOMO. Okay, so subtle but important distinction. We'll get into that in a minute. All right, let's see. Reading the rest of the questions, I think I'm caught up. Asset managers don't seem to deal with what happens intraday. Depends on the kind of asset manager they are, Alexandros. If they're managing a swing trading fund, probably not, although I've never met anybody in that role that wouldn't agree that, you know, getting the entry right is critical, even if you're swing trading for months. Having said that, you know, the term asset manager, again, is one that, you know, what kind of assets are they managing? You know, if they're managing gold bullion, yeah, they probably don't care. If they're managing a portfolio of S&P 500 equities, I would think they probably do care, but the way that they deal with it is different than you, being a day trader. Okay, yeah, you could use replay to learn the mechanics of placing trades, but I think it's much better, Amy, to do it live, real time. You know, if that means you've got to use micros, fine. If you can't afford to trade one micro at a time live and make or lose a couple of bucks a tick, then you have no business trading in the markets. It's just that simple. Okay, let's see. Christine, just to show you how the setups develop. Well, that's what I'm going to do live. So that's the beauty of doing it live. Replay won't show you that because you don't have the advantage. You have the advantage of knowing what happened that day. And don't tell me that's meaningless. You can say, well, I don't remember what day it was. It's just a random day. Nonsense. Your brain recognizes patterns. It'll figure out what day it is, even if you won't. Okay, understand that? Can I show the other flow chart I referred to again. This isn't actually a flow chart. This is my old linear process here. Is that what you're referring to, John? Well, I'm waiting for you to respond. That's John McCormick. I'm asking that too. David, well, your other question is when you're trying to determine the price of action, is the same mental shift switching scalp to weight? No, that's a completely different mental problem, and I'll address that one too. Let me know when you answer that, John, please, in the text chat if this is what you're referring to, because I've shown a few other things. I'm not sure if you're referring to, I showed just as a good example of a flow chart, I showed something that Jonathan had posted, which was this. And that's a better graphic example of how I used to do it this way. And that's a much better visual than mine was. So I'm not sure what you're asking me there. If you're asking me this or that, but we're going to talk about this one. Okay, let's see. Last question. Yes, okay. Yeah, that's just what I used last year, and up until this is a refinement of it. So we're going to focus on this. This was again, if you were at the first two sessions, I explained this and why I don't do this anymore. These items over here are built into the other one, and I kind of do this automatically. My personal competence check. So I really don't need that. So what I did was I found a better way to flow through this. And that's what this is. Okay, let's see. Amy, thinking about a brand new person learning, do you just jump in live? Yeah, you know, that's a good question. The dome, when you don't know what you're doing, can be really weird. Yeah, because it's graphically so much faster moving. So that's a good point. That's probably a better topic to discuss at another session. Let's get going on our topic here, and we'll try to do that along the way. All right. So first of all, review really quickly. Let's talk about the top part of this. Context. And by the way, this is just a quirk of Google, but this is an image I kind of have on top of it. So for the moment, I'm just going to stick that down there, and so we can focus on what I'm talking about. Context is critical for any of this to make sense. So you have to go through this, but you don't have to be really formal about it. The idea is just that the time of day, the macro events, the news, what the recent technical picture looks like, what the intraday auction structure looks like, or the overnight auction structure looks like, and how far the excursions have gone away from that structure. If you don't have all of this, then none of this stuff down here will make any sense or be of any value. So this stuff is really prerequisite. But the reason that I organized it this way versus this way, where it used to be kind of over here and the setups were over here, the idea around the change is that you can flow from one item to the next. And once you've done that and you understand the price action you're seeing, and I'm going to show you an example of that in just a minute, then your ability to distinguish where these might occur will be much more acute, and that's what you're looking for. So a lot of what John just asked me, a lot of this stuff, how did this get there, and I had a process that I posted also in one of the first two sessions of this that was from a couple of years ago. And what I used to do was I used to try to figure out what are the most important pieces. Like, this was kind of a way to put my brain in context for the open. And then this is a way of saying, okay, comparing the delta to the price impact of the delta. And all of these things were important, but unless I was constantly cycling through that mentally, when I was looking at a setup, I would get stuck and forget things that were important. And as I mentioned at the beginning, I couldn't find a way to quantify these well enough that I could put them into the process either. I knew they were important and I knew they were pieces of the puzzle, but there was no like step 1, step 2, step 1.5, if then logic that would make this work, because it's too contextual. And that was the epiphany I had. I mentioned again at the beginning of this ESP session, and the group of the 4 sessions, the workshop, let's call it, I mentioned that I had this epiphany kind of lying in bed watching this from across the room, and I wasn't feeling very well. And I often have epiphanies when I'm not feeling very well, because my brain gets really simplistic, and it just eliminates all the nonsense, and it just focuses on the problem. And I've heard that from other people that have chronic pain too, which is interesting. A lot of musicians have chronic pain, professional, world class. Peter Frampton's a good example. He also has the same disorder that I do, and has stopped touring because of it. And he's one of the best guitarists ever. But when your fingers don't work, it's hard to play guitar. And I totally feel for him. So the idea here was to get from here to here, to the setups, without having to constantly look at all the variables in step 1, step 2, step 3. I say over and over again that I don't do that. And so what I realized was that some of those are encapsulated here, and as well as many things that weren't on that list. So if you stop, look, listen, smell, in other words, familiarize yourself with your surroundings. That's why Special Forces guys do that. That's why it's just such a good training. I did a Special Forces boot camp with a friend of mine who is ex-Special Forces, and he does a business boot camp like that. And it was really expensive, and it was 30 days, and he comes and lives with you, and you have to get up at 3 in the morning and go running and, cook high protein breakfast and all this stuff. It's one of the coolest things I ever did. But anyway, that's where that comes from. Stop, look, listen, smell. You have to get context for your surroundings constantly. You have to breathe, let your brain evaluate. So these three things encapsulate that. The time of day, the macro picture, the geopolitical economic news cycle. That's like the biggest picture there is. But it's also the stuff that's going, if Trump says something, or if there's a war in the Middle East, those are the big picture macro things. And macro is my economist brain talking. Macro meaning something that can just impact the whole world. Coronavirus was a macro event. So there's a really good example. Macro trumps everything, not using Trump as in Donald, using Trump as in overrides. So macro events override anything else. Nothing else matters. The value of a company, the technical picture, the order flow, nothing matters if something happens on the macro, because it invalidates anything else. Okay? So the idea is to say, okay, what are those things, and are any of them potentially happening right now? Yes, no. And if there's yes, you learn to be really careful, okay? Or you learn to capitalize on the volatility that will create. The next thing is, okay, now that we know the kind of global risk for the moment, what does the technical picture look like? And I get that from here. Right now it's set on a minute, but this is my, typically what I refer to as my 5-minute chart. It's the one over on my left monitor, my vertical monitor that's under the footprint. And Lee and I have found, this is really weird Zoom stuff, but we found if I use my portrait monitors, or if Lee does, our vertical monitors, that Zoom has trouble rendering that. And QHD. So one of the things that's actually, there's a conversation going on about monitors on the Slack. And one of the things I'm having to think about is if I get, like 38-inch, wide QHDs, will Zoom really freak out? Anyway, so we're constantly thinking about how to be able to teach you guys and have the platforms work. So here's a really good, just simple, this is how I do the price context. And, if, let's just say for argument's sake, it's overnight and it looks like this right now. So, we're right here. That's a pretty descriptive story the market's telling you here. And if you're not seeing the story, you're not looking, because this is, if the market wrote poetry, this would be the best poetry it could write. We have opening range, opening range, opening range. We are above that. So we had consolidation, or another term you could use, again, it applies to any time frame, is ebb and flow. We had ebb and flow, and we have now left ebb and flow. The market is price discovering to the north. That's what this tells you. So this entire area here was one big ebb and flow range that the lows got bought, the highs got sold, and when it left this range right there, that was a very significant event. So that is a really crystal clear example of what we're talking about when we're saying we want to see the technical picture and the recent ATR here. I'm just using the, the technical analysis, average true range. You could just say recent range. That's just as good. We're not formally calculating ATR. We're just looking at, what's the movement look like, okay? And you can do that, I sometimes go out to 20 minutes to do that and go a little further back because depending on what's going on, sometimes that's illustrative. So let's let it load a little more data and we'll see if it's any more. Ooh, it is. How about that? Okay, again, not from a point of view of support or resistance, but we were in a range right here that we have broken out of, and we are attacking a previous range that got sold off very aggressively. So this is really significant. Is this tradable knowledge? No. Is this an edge? No. It's context. It's context, and it's critical. Okay, what's another thing that qualifies as context in that same sense? Well, Lee and I have been talking about this ambush zone for weeks. And there it is, okay? When you have a big move in one direction or another and you calculate, excuse me, coffee, wrong pipe, and you calculate the fib retracements of that drop. So that's what this is. They're the Fibonacci retracements. This area here is commonly known as the ambush zone, as we've talked about a few times, because everybody in this zone tends to get screwed, the people short and the people long, because it's just it's no man's land, or the ambush zone. So you can see again, these little consolidations that I'm talking about are occurring within the bigger picture of that. And that is exactly what we're talking about when we were saying we want to understand the technical picture and the recent range excursions, or the recent average true range. Let's see, is the blue area there the ambush zone? Okay, let's go back to the picture, and I'm not sure what was blue, but okay. The ambush zone, depending on whose definition you use, personally, I use anything from this one, or 38%, up to the low end of this one, 76%. So the normal one that everybody typically uses is 38 or 50 to 61. And I like 38 to just above 61, because it gets gamed all the time. So again, that's just a anti-gaming. So it's this entire range. It's not necessarily the blue. That 23% is probably a little low. The typical conversation would be around 38 to 61. But again, it's arbitrary. It's where people, both sides, are likely to be wrong. That's the definition of it. Okay. Stop, look, listen, smell, Clay. That's how you perceive your surroundings. Okay. Let's see. Yeah, Kawika, I'm going back through the comments now. That Sigma, this one here. Sigma order flow overrides TA, and Sigma word meaning total overflow overrides the TA, the technical analysis. That's absolutely true, but it stopped being part of the process for me. I know that. I mean, that's a given for me. So why stare at it every day? Now, for some of you, that might not be true, but where that came in the new process was it's part of this context. But once we get out of the previous day and the overnight context and get into the price action, that idea pops up in a number of the different setups. So rather than sticking it out here as something to constantly remind myself, it shows up in the impact it has on a particular setup now. So, and if you ask me questions, by the way, guys, about anything on here or anything I've ever said about context, I will be able to tell you where it lands on this document. It may not be obvious, but everything is here. And that's part of having your own Bubba and building your own process after seeing an example like this, is that, that might not be obvious to you. And there's a lot of ways to help yourself remember. Highlighted it, make it a different color, use visual aids. But remember, your objective isn't to develop the coolest, prettiest, most comprehensive process sheet. Your objective is to be able to do it with discretion without even looking at this. So that's where you're headed. Always remember that, or a better way to put it is never forget that. Okay, so let's stick this back up here. And the mode thing is critical. I'm not going to get to it for a little bit, so just put that on the back burner. And let me just zip through the questions and make sure I caught up on those. Yeah, stay out of the middle. That is the best way to define the ambush zone and the middle of anything. So let's go on to the next part of this. What does the price action look like in terms of auction structure? Because that's intraday. So that's the first one that I really only want to understand intraday. So the previous days don't matter much. That one becomes this one right here. Oh, where did we go? Let's see. That one. But it doesn't matter, you know, I'm not looking at 20 minutes, I'm looking at 1 minute. And so, for example, let's just say this was today and we're still trading, okay? So, you know, let's say it's right here. And that's what's going on. So we're right in the middle, right, of a range that's real middle-like and it's real ebb and flow-like. So let's say this is what you were seeing and you were evaluating it with this document right here. So, you know, at this point, we've already got this stuff in the back of our head. We're here, auction structure, right? So let's go back and look at that. What does the auction structure look like? There is a very, very serious ledge right there. Because if that breaks, you know, we have potential all the way down to the overnight low, right? That's just standard volume profile or market profile knowledge. If you don't know that, go back and read Dalton's books or just watch it. That's how it works. Areas of thinness or lack of volume tend to either get traveled through very quickly or get filled in. So right now, if you were watching this, you know, or even watching it, you know, back here, you know, like that, that's even more illustrative. You have a first hour high and low that have established nicely, consistent with the overnight pattern and the pattern of the previous days that I described. And now on higher volume moves up and lower volume pullback, by definition, those are springs. So on spring behavior, we are departing the first hour high or the initial balance high. Doesn't get a lot more bullish than that behavior right there as far as price action. And so if you kind of watch that unfolding, look at that when it tagged back down to the first hour high and departed again. Okay, so if you were just watching this intraday with respect to our process document, you would be, well, the initial balance is getting bought. The first hour high is getting bought. So, you know, that's a pretty bullish setup. The context is an old consolidation level, an old ebb and flow level. We are above it on bullish tape action. So, and there's nothing in the macro picture, you know, absent a war breaking out or, you know, them discovering a million new cases of COVID-19 that will probably impact the tape in the next hour or two. So if with that conclusion and that understanding, we are now down at price action. Okay, and this comes with us. Okay, again, I kind of made it this way on purpose as a kind of a graphic, but for the purposes of discussion, I'm just going to stick it back up here. All right, but it's important that those two modes are critical. But until we get through our understanding of the current price action, we really don't know where we're at. Based on what I was just saying about the auction structure, we should certainly be thinking this way, right? All trades are scalps until they prove otherwise. But if you're looking at this particular chart or the behavior that created this chart, whoops, sorry, wrong one. I wanted this one. Okay, you know, this is a setup where everything is telling me so far of that funnel that a long down here on the initial balance is not a bad idea, right? Does everybody see that? Are we all there? Christine, do you not see the spring behavior here? If you don't, say so, because it's about as obvious as it gets. And I'm not saying that to put you on the spot. I'm just saying, is 26.8K, is that number bigger than 2.3K? If it is, by a factor of what? That's cool. No, Christine, there's no sorry. You're asking a question, I'm answering it. Do you see that? Spring behavior, if you've looked at what the spring channel talks about, it's a volume lower on a pullback than it is on the moves up. It should be really obvious here. But this isn't a class about springs. So I will answer those things and you don't need to apologize. But what I do need you to do is answer whether you get what I'm saying there or not. No need to apologize. You got it. Okay, cool. And that's what a spring looks like. And an up thrust just looks like the other side of that. So let me see if I can find one real quickly. Yeah, these are up thrusts right here. So, 26 down, 12 up. 4, this was a little shuffle here, 4K down, 7 up, and then 15 more, then 15, and then 6. You see what I'm saying? That's what it looks like when it's going the other way, although that's not a perfect example. This was a better example to the upside. But anyway, that's springing behavior because, that's what it looks like. It's springing up. All right, so let's leave that way. Okay, so that gets us into price action. Once we have this understanding, then the next thing we want to do is say, okay, so given, and let's continue to use that day as an example. These 3 types of price action can occur at any time within any structure. And it's critical to just understand the differences between them. And so let's look at a bunch of examples. So the examples we're looking for here, again, we're not talking about red light, green light yet. That's the pace of the tape, and we're not going to be able to see that in a static environment. We're going to need to be live to see that. So for the purposes of price action, however, ebb and flow, price discovery, and high momentum, those should be fairly easy to see. So let's go look at a few examples of them. And again, it doesn't matter what interval, I can be on seconds or I can be on minutes. So here's minutes and seconds, okay? And, the one that I just showed earlier is a really good example of what ebb and flow looks like. When it's just really not going anywhere over a long period of time with, nobody is in control. The market goes up a little bit, it comes back a little bit. Pete Davies calls this the 8-tick dance. Lately it's been a little more than 8 ticks. 8 ticks used to be typical for this behavior, in a quiet market. But, call it 8 ticks to, I don't know, 8 points is probably in this market a good barometer. And if it's just going back and forth, that's what high momo or ebb and flow looks like. And, you can crush the market together and see it. Here's a bunch of it here. And you can spread it apart and see it right there. You can look for it on a 1-minute chart. You can look for it on a 5-minute chart. None of the time frames or whens matter. It's a behavior that we're looking for. And so, this is 15 seconds. Let's go get, 30 seconds should be good here. And we'll look at a bunch more examples. If you don't get this part right, about understanding the price action, then nothing will ever work. Every trade you do will be wrong. So that's why this is just critical. So context from this collective point of view, and then within that context, what is trading actually doing right now? Okay, at the moment we want to see. Okay, so this is a really good example of what typical ebb and flow looks like at the bottom of a price level. It'll go back and forth, go back and forth. And then when it leaves it, again, this is overnight, the volume's really low, but when it leaves this range, so, let's just draw a couple of quick pictures here, drawing tools. This will make it easier to see the area I am talking about. Okay, so if we take this little range right here, okay? This was a period of what, 10 o'clock at night to 10:30. This was a couple hours. And the market never really went above, I actually drew that up a little too high. So let's use this level here, 2909-ish. And the low is around 29. So that's a 4-point range. So that's a good example of what I was talking about. Then it left that range. And then when it came back there, it tested it and it never looked back. Okay? That's a really good example of what an ebb and flow looks like. And when it leaves that range, and then what you could call a retest of it, but I prefer to just look at this entire thing as a whole nother ebb and flow. So let's do that. And again, it's useful to just draw a rectangle so we can kind of all get on the same page about what I'm talking about. I'm talking about that one, okay? Ebb and flow in a range. Leave the range, ebb and flow in the range that we've established, and that tests the top of the previous range. You know, I can continue, but this goes on all the time. Let's look at some other examples of it where something different happened. Okay, there's one right there. We broke out of it with something pretty aggressive. That might have been a, you know, one big trade. It might have been something on the tape. You know, it's around midnight, and I've told you there's a midnight oil trade. I call it not just in oil, but in the indexes, because this is about the time, you know, midnight on my charts right there. That's about the time the Middle East and Asia start getting active. And if you just look at the world clock, you'll see why. So, you know, these could be anything that causes that. But the important thing here was we were in this little range. We aggressively left it on a lot of volume. Came right back immediately. Happened again. Came right back. But notice the came right backs tested the level. They broke it by just a crack, or, you know, if you drew that level just a little bit lower down, they didn't break it. And then, you know, this is equivolume. So when you see, you know, a thin little wiki bar like that, that didn't have a lot of volume in it, and the volume was all down here. But when you see, you know, bars like this or candles like this, where it just blasts up and it's much wider, basically this range got bought again, and it got bought really aggressively. When we had that happen, that is no longer ebb and flow. So ebb and flow, this was an HMOMO breakout of it that came back to the range, which is really significant. This was a lower volume attempt again to do that. That would be an up thrust right there. If you were looking at a 30-second chart, there's an up thrust. So you actually could have very easily said, all right, that's a short, and got short right there at what, 24.25. Wrote it down until they started buying it again. So Michael, who was asking me about absorption, forget absorption. Are they buying it or not? Yes, this right here was absorption, but who cares? It got bought. The low, the range, the up thrust from here pushed down into an old low that got bought and created a spring out of it. And if you look at that really fast, you'll see even more granularly, which is a great word, how a setup like that unfolds and how fast it unfolds and how obvious it is. So, you know, down here, the Furu channel would be selling you on buying their $5,000 absorption indicator. And Doc would just be saying, look, Michael, we stopped going down, and we were going down aggressively, right? You know, we popped up and it just got sold instantly. But look at the delta and the sum of that. You know, the thing Kawika just said, you know, it's the sum of the delta versus price behavior. That's on my process from 3 months ago, right? It's this item right here. The sigma order flow overrides the TA. The TA is telling you, oh, double top, you know, which is totally wrong. And the order flow is telling you, okay, this attempt to break out of this ebb and flow range, they tried to sell it when it broke out, and they were successful. They, whoever that is. There is no they, but, you know, they, the collective of all people trading right now. And then they tried to push it back down, and they just got overwhelmed by buyers here. I mean, look at how you know, imagine, Michael, right now, if that you were short there, and, you know, you're watching the footprint for absorption or whatever definition you're trying to use for that. And all you need to do is look at a 5 or 10 second chart or watch the footprint and the price action of that. And literally every time the bid gets lifted, the buyers just overwhelm it. That is just classic either buying or short squeezing. And in this case, probably a little bit of both. So, so that's how I would have read that. Now, could I put that all down onto a checklist of step 1, step 2, if then? Yeah, maybe, but, you know, by the time you went through it, the trade's over. Okay, so you know, that's a good example, but it's important to understand that example in terms of logic, which is why we need to stay here on this funnel. All right, stopping for a second and going back to questions. Okay, James, pace of the tape. Isn't that how fast the time in sales goes by? That is one way, James, of measuring the pace of the tape. If you're using a pace of tape indicator, that's typically what they measure, but they do it algorithmically. So, you know, based on how far your look back period is, you know, how fast it's going by versus what. And that's the trouble with using any sort of metric or indicator. And for me, if you look at the video I did, the last session of this, and then the live one we did on NFP for non-farm, or the week before that around FOMC, what I'm doing is I'm looking to get a context. So I'm looking for the trade, but then once I have the trade on, like let's say I'm short, I'm going to constantly watch the trade executing. The time in the sales is the wrong word for it. It's actually reconstructed that I'm watching. And time in sales is the furu, bad, useless information. If you don't know what the difference between those two are, that's very important. Time in sales is just aggregated the way your broker wants to aggregate it, and the reconstructed tape is the actual real trades that are going by. And time in sales is useless, and reconstructed tape is useful. Having said that, again, let's say I'm in a trade and I am short or long. So, you know, I'm just going to grab a picture of the dome and say, you know, let's say we were doing this at this moment. I mean, literally, when I'm live, I can show you better examples. But let's say this was the scenario right now. And, you know, if you look over here on the right, you can see where the LRCs are. And, you know, the market dropped down into this area. But if you're looking at my tapes right now, there's buying. Okay, for me, this has to be a long. There's nothing else this could be. And the conclusion is simply based on that. I'm looking, you know, none of this up here matters because, you know, we would have already had that as an assumption. So the context, the only thing that matters in terms of context of that picture would be the auction structure and then whatever price action we're seeing. And the price action, you know, the tape is all buy side and the most recent blocks are as well. It's at kind of an inflection point that we've talked about before between the LRCs, you know, where the fast one is starting to turn at the lows. If you look at this fast footprint over here, you can see that we had a turn and now we're getting buys, and not only buys, but we're getting a lift in the ask. And so to me, there's nothing on this chart or this screen of order flow that says get short. So to me, if I was short, this would be telling me right now, green light, danger, Will Robinson, okay? And I would be thinking of either getting out of that short or I'd really want to understand why I'm on the wrong side. You know, maybe there was something that just happened or whatever, which obviously we can't tell. But look at all of this block behavior is at recent prices. And the reason I only show a meter for the last 30 seconds is because I want to see the right now. So this 13 is showing us this block right here at 45.75, which literally just would have gone off. But look at 45 and, you know, 44. That was the last place that were selling. And those guys got screwed because the buyers came in right after that. So again, the red light, green light pace of the tape here would be telling me that it's a long, regardless of whether I had a trade on or not or anything else. So that's what I'm referring to with that red light, green light, and pace of tape. And I'll try to show you more examples of that when it's actually live and they can make more sense. Yeah, what Lee said is really good. It's how fast it's going by. And it's again, not time in sales, it's really reconstruction. Okay, Kawika asked in that same burst of questions. By the way, these are great questions, and you're helping me to elaborate by asking them, and you're also showing me where you guys are at, so keep it coming. So what Kawika said, Jeff, is there a difference between ebb and flow versus range? They are both factors in which one of these setups we're looking at. So we're going to get to that in just a minute. Let's see, what are we at? We're at an hour right now. Okay, that's good. That's what I thought. I figured if we spend an hour up here, then we could at least get an hour on some of the setups next. So, all right, zipping through questions. Volume in the range of the LRC. Okay, good, Matthew. Let's see. James, Is that what I call price discovery? No, price discovery, go look at the video on Friday right when the NFP number comes out. That's what price discovery looks like. It's just crazy all over the place, because nobody's willing to step up and put up a bid or an ask. They're, if they can't get an extreme fill for their buy or their sell, they're not interested because it's too risky. That's what price discovery is. Okay. Yes, it could be the London Open, or it could be a lot of things. Look at the world clock, James, for 6:30 or midnight in California, and you'll see what's going on. And I talked about this again in several of the other sessions. You need to watch the old videos, and you'll catch up on a lot of this. That there's a whole community of people that trade oil and gold in the middle of the night that live in the Middle East and Asia, and many of them are like my former trading partner, who I said was a Brahmin, a prince. He's got a billionaire father, and he trades a $100 million discretionary account that he inherited. So, those are the kind of people playing before London gets going full swing, and they're interesting folks to watch, particularly in the oil market when it's not quite as crazy. All right, let's see. If I was trading this, where would I enter? That question makes no sense because we're not trading anything and we're not looking at a specific situation. James, I'll come back to that when we're actually looking at live situations. Let's see, David, at the point where we shift from sellers to buyers, okay, I assume you're talking about that image that I threw up there. Would you say that you're finding yourself resetting the dome? It depends. I reset the dome when I want to see a new total. And I get asked this question so frequently, David. Remember, there's a couple of factors here. I've been doing this a lot longer than most of you, both trading and trading on the dome with this technique, number one. Number two, and again, this isn't, I'm not being ego here. I'm being matter of fact. I do think reasonably quickly, and I can make decisions pretty quickly, particularly for a 60-year-old. That, again, is just my personality. So for me, this stuff makes a lot of sense, but it didn't when I was you. When I was you, I was doing exactly what you're doing. I'd go watch, a Grady video or an Axia video, and I would watch what they were doing, and I would get it. I would get the idea of it, but I didn't see what they were seeing on the dome that was triggering their blink. I didn't have enough experience to recognize it.
Jeff, can I jump in on that? Because we get this a lot, don't we? When
we always do, and I'd love to hear another opinion. Please do.
And I think it comes down to, I need new information. And you can't explain why you need information. So the blink is, okay, my idea is working out, or it's not working out, or I'm at the extreme of this ebb and flow range I've identified or something. But it's the information that's in the dome now is stale. So I need to get a new picture starting now in order to evaluate. So that's my take on hitting reset.
I love it. And that is exactly correct. And notice how that was in my process. Collect info. And you've also heard me say that not sure, or if you see consolidation in the market, consolidation is ebb and flow at a low, or ebb and flow at a high, or ebb and flow in a middle. That's the definition of consolidation. In other words, nobody is being aggressive one way or another. Consolidation in the middle of a range is the most dangerous thing there is, because everybody agrees that there's nothing to do. So stay away from those. Consolidation at the edge of a range is where the opportunities are. So that's what you're asking me, David. You just don't have enough experience yet to learn how to see it fast. And you will. Stay with us. Trust me. Trust the process. Trust your ability to learn. All right, let's continue. Let's see. Dimitri says, pay attention to the Euro Open. Yeah, if you want the European Open, you can do that. I don't actually pay attention to that time of day. I know it's going on, and I know when it closes in the back of my mind. But again, my point of view, guys, is that used to be at a level of trader, and let's just define some levels of traders, total idiot, newbie, furu student, somebody that has realized that they don't know what they don't know, amateur that can sometimes trade profitably, amateur that can consistently trade profitably, professional that can trade profitably as is the process of scaling, and then lastly, professional that is scaling setups and continually reiterating that process. If that's the continuum of trading knowledge, then think about it for a minute. You know, um, in order to learn to see that, you know, you need a lot of seat time. And just thinking about the London Open, for example, doesn't really mean much if you just learn instead to watch the price action regardless of what's opening or closing or what the news is. The price action will always tell you what you need to know. It took me a long time to understand that, coming from technical analysis, where I thought a chart could predict the future. And you know, again, for me, that wasn't just something I read in a book. That was actually something I had made a living doing for 20 years. You know, support actually meant something in 1995 because there were no order flow tools. If you weren't a local at the exchange trading in the S&P pit, you didn't have information about order flow. Those were the only guys that did, because they could literally see the orders coming into the pit. You know, there was a guy that used to do a squawk, and he used to talk about one of the bigger traders, number one, he called him, and he would say a squawk was somebody describing what's going on in the pit on a radio show. And he would say, okay, number one's stepping into the pit. And whenever that happened, we all knew who number one was. He was the guy who traded the biggest account as an individual. And he also did institutional trading for smaller institutions. So if this guy came in to the pit, that meant, you know, there's 1,000 lot coming on one side or the other or both. So absent that information, technical analysis was useful. But fast forward to 2020, we all have really, really good granular information about buying and selling. So the simplest thing to game is all of that other stuff: price levels, times of the day, London opening, London closing. So that's why I knew I had to train myself to ignore it, but it took me a long time to actually be able to do it. But that's what you need to do. Okay, scooting on through the questions. Okay, Stan, your ebb and flow seems to be a relatively narrow trading range. By definition, yes. That's the whole idea of ebb and flow, is that it is a trading range. Now, trading ranges change over time. In a normal, quiet S&P 500 ES market, 20 points is a typical day, and therefore Peter's, you know, 8-point range, the 8-point dance is typical. Excuse me, the 8 tick. You know, 2 points, that's typical retail ranges. In this market, I've seen it 10, 16 points. So you have to constantly be evaluating it. Second half of your question, from a Wyckofian perspective, or students of Wyckoff, are you viewing the narrow range as an area that is building cause? Again, I refuse to use the words accumulation or distribution because they're meaningless. But the concept that you're describing, Stan, yes. What the idea is there, look, watch the video that Lee did. It was excellent. And these are excellent questions, by the way. But if you go to the library, there's a great video. I did a little bit of it, but it's mostly Lee. And it's about why price moves, okay? And price moves for only one reason. And so what you're describing there, Stan, is, of course, it's a relatively tight range. And of course, something's going on in there. The mistake you're making as an order flow trader is you're trying to predict that accumulation or distribution is going on. And what an order flow trader would say is, why? Just wait and see what happens, dude. I mean, you know, literally. So if you go back and look at the example chart that I had up here, oh, wait a minute, it's not that one, that I drew the ranges on. Hang on. That should be it. Okay, so if you go back and you look at this one and you see where those are, you know, that should help answer the question. What I'm trying to accomplish there. I'm not trying to predict what's happening in here. I'm being prepared for this to happen or the opposite to happen. You know, so let's say, you know, this was my little range here. When price leaves ranges, notice how aggressively it tends to do it. That's your edge. And remember what I said in the warm up to this session. Somebody asked me, in fact, it was Bar, who's here, asked me in the Slack, what is the definition? Bar, what was your exact question? I want to make sure I get it right. Oh yeah, an edge versus a setup. He said if an edge is a statistical advantage, what's a setup? And what I said in the Slack was it's the execution of the edge. Okay, so let's move forward with that, and I'll try to field the questions along the way. Let's see, I just want to, Jonathan, not following something. You said to sit on hands if you see consolidation. I said to sit on hands if the market is consolidating. Yes. And I just said this a second ago. The opportunity is when it leaves a consolidation. Do you understand that now? You thought what Amy said was contradictory. What did Amy said? Where's Amy's comment? Or somebody just repeated or cut and pasted. Okay, here it is. So ebb and flow. No, I think she said exactly what I mean. So what's the contradiction? This is important. Lee, are you following what the contradiction is here?
Not remotely.
Yeah. I'll unmute you if you want, Jonathan. Let's hear you. Hang on a second. Let me just find you on the list. There you are. Go ahead, talk. You won't let me unmute you for some reason. You must not have your microphone.
Mute myself. There we go.
You go. All right, talk.
It was asking me to unmute myself. Okay, so trying to rewind my brain 5 minutes. You had said that consolidation at ebb and flow, or sorry, excuse me. Ebb and flow is consolidation, and when that happens at extremes or at highs and lows, you want to sit and wait. But then you had said also just a moment later that the opportunity is when you're consolidating at extremes. But now that you just said what you said a second ago, I think I just put it all together in my head as I'm saying it out loud, that what that means is you wait and watch at those areas. The opportunity is what you just said. When it leaves the consolidation at the extremes, that's when your opportunity appears.
Yeah, that's exactly right. And again, you guys, these are great comments and great questions. And what I'm learning by hearing the questions, and let me get the minute chart back over here. That's what I'm looking for. Is that you guys are following this conversation, and let me just show you an example of that. So I'm going to put you back on mute. Let me know if you need to return.
No problem.
Okay, so. It's funny. I just have to comment, Jonathan. Your JVC as your nick. You know, I'm old school audiophile, so I remember like JVC tube amps and stuff. So I don't know if you're of that world. I know you're a musical man, but I forget. You're not like the heir to the JVC fortune or something, are you? Okay, so here Bar's asking me, if edge is defined as a statistical advantage, then what's a setup? Setup is the application of it. Yes, okay. That is exactly the answer. So let's just look at one example of that. Okay, and I'll just go back. Let's just go back. Okay, so here's a really typical situation that you see a lot. And this was just the one that I was talking about a few minutes ago, okay? So let's literally, okay, everybody, put everything down and pull up your chair and fire your coffee up, and we're gonna do this right now. We're gonna do one, okay? So this is the first practical example, and then, and then we'll take questions. So again, context has to be assumed. You have to assume that you've got that in your head. Otherwise, you can't execute against price action, and you certainly aren't going to execute against setups. So you just burn the context into your head by just take a minute and perceive the environment. That SLLS, if you want to write down, in English, what I mean, stop, look, listen, smell, and that translates you're perceiving your environment. Think about it this way, okay? You are a special forces soldier, you're a SEAL or a Delta or whatever, and your helicopter just dropped you and your 5 members of your team in a rice paddy somewhere in the middle of the Middle East. And the helicopter flew away. Are you guys going to immediately start doing something? No, you're going to sit quietly and listen. and perceive who's there. Are there enemies around? Is there a landmine you're going to step on? You know, and then once you perceive the environment and you got a handle on what's going on, then you're going to look, okay, now we have a mission to execute in this environment. We have to go do it. Okay, so think that way when you're looking at the setup of a market situation. Let's assume this was live. Okay, we will do it live, but for purposes of teaching you today, it's much easier to do it when it's static. So, and again, for the purposes of this example, we're going to just scoot the time frame over, and we're going to look at this as if it is the middle of the night. So this is the day we had yesterday, and right now it's 2, 3, 4 in the morning in California where I'm at, and this is the price behavior we have been seeing tonight. Okay, so this was yesterday. That's the first hour high, that's the low. We blew above the previous day high, which was right here, which was also tested, by the way. Do you see how that happens? That's why I use that as an inflection point. Look what happens at it. You get a little wiggle, a shimmy as the market tests it because it was a high. Of course it's going to test it. Is it a technical reason to sell or buy because it's a double top or a W or a head and shoulders or some other nonsense crap? No, none of that. That's meaningless garbage. What it is, however, is an opportunity to look at what happened that day and figure out what we might be able to do with it the next day. So that high got bought after the first hour got bought. So yesterday was bullish, okay? And now it's overnight. And this is what we're seeing. We're drifting along and we are consolidating. So this is what I'm talking about when I talk about this right here, okay? Not sure or consolidation, sit on your hands. Okay, so if I was looking at that old view, I would be watching this range during the regular session, or once the overnight started, I'd be watching this range or this range, and not much is happening. Might I buy this area here? Yeah, I might have bought that overnight because that would have been an edge. And it would have been, testing a previous area that got bought. So I would have watched the order flow. And you can see we sprung away from it. Here's another example of a spring, Christine. And again, let's talk about what it means in terms of Wyckofian behavior, not with terms, but with just action. The market is drifting along, consolidating at the highs. It's digested yesterday during the overnight, and so far it agrees with it, right? And any kind of drift down toward where we closed, right? Or where we consolidated last, or a previous high, or the previous initial balance high, is likely to at least get tested, and it did. And you can see the behavior changed from drifting down to starting to drift up. See, look right there. And then we had a spring. So that right there was your clue. And this is a 1 minute. On a 20-second, that would be even more obvious that the behavior was changing. Okay, again, we don't know what's going to happen today yet. It's still overnight. So as we're seeing this, okay, so let's just kind of let it unfold. Okay, so if you were watching this ebb and flow and it did that, high volume drop into, use the word support or an old inflection point if you'd like, an old consolidation, and look what happens. It gets bought again. And whoops, sorry, I didn't want to jump quite that far. So, sorry, I'm too far ahead of myself overnight. Okay, so if you watch those old inflection points overnight, the market doesn't have anything else to go on yet, except maybe news. And remember, that's 5 o'clock, so news was probably coming out if there was any. And then, okay, that was probably, oh, guess what? That was the news announcement. And that's price discovery right there. We shot up, we shot back. That would have been impossible to trade. And then right after that, that would have been the time to go opportunity hunting. Okay, so we understand the context of the overnight. We can see, we're seeing the volume for the whole day. There's no way to go back and just see the volume for this point in time right now, but it's pretty much how it played out going forward. So at this point in time, where are we right here? Okay, in the process. All right, we understand what's been going on overnight. We understand the technical picture is that lows are getting bought above yesterday's initial balance high, first hour high, close, etc. The auction structure overnight is still pretty bullish. Nobody's looking to take profits on yesterday. What's the price action? We can't see the pace of the tape, but we can see the price action. Are we in price discovery here? Well, no, we weren't until, this was clearly ebb and flow, right? I mean, what else would you call that? Up a little bit, back a little bit, up a little bit, that's what that is. Price discovery. Well, let's see what happens when ebb and flow changes. And you know what? Let's blow this out to 30 seconds so we can get a little bit more granular on it. Somebody has the JVC badge in the pit. I don't remember who it is. I don't know them, but I remember I've seen that badge. How can you become more proficient at identifying inflection points? Don't use technical analysis would be the first place, Christine. How do you find them now? While I'm doing this, please answer that and I'll come back to it. All right, so here's 30 seconds. Whoops. And take a look at price discovery real time right there. Okay, remember, on a 1 minute candle, you could not see what happened there. But if you look at that spot, I'm sorry, that's the wrong spot. Hang on, we're all pushed out. So I need to get the spot I was talking about. Okay, let's see. So that's today. We need to, okay. All right, there's the overnight right there. Here it is. That's the spot I was trying to show you guys. Okay, so even with 30-second bars, look what happened. See this little ebb and flow range right here? And look at this behavior right there. So if you were watching that on the dome, guys, this would have been what HMOMO looks like. And if you were watching it on the dome or on a footprint chart, here you would have seen back and forth, we would have been bid, ask, up a little bit, back a little bit. And then all of a sudden you would have seen zero prints and you would have seen every level just get elevated to the next. The ask just get lifted and lifted and lifted until it stopped. And then whatever caused that, you got a high volume reversal. God, you even have a wick on the delta. That's pretty rare. And it just literally spun around and went the other way. And whoever bought that or got caught short, it reversed and look at where we came back to. Literally right to the range. So, if you need help figuring out targets, that's how you do it. You just look for the last place that it stopped moving from, and that's your trade. So let's stop here for a second, because based on this price action, okay, we saw price discovery, we saw ebb and flow in a range, and we saw HMOMO all at once, okay? This is ebb and flow in the range. This is HMOMO long. That's a high volume reversal of that long. Back down, we consolidated. Again, it will always do consolidation over a couple of fast bars. That's always your clue that the behavior of the market has changed. And that, Christine, will tell you where an inflection point is forming. Because by definition, if the momentum slows down, right, we still have momentum here, but we had HMOMO up, we reversed, we had HMOMO down, and then guess what? We have HMOMO again up, but we don't have it quite as aggressively. And we drift along in a new range, a little bit above the old one. So these buyers were not completely wrong, right? And but fading them would have been a really great setup. Remember what I said, overwhelmingly, my best trade I do is to short these, catch that wick. I'm really good at that. But it took a long time to get good at that. And the thing Anita said the other day is, she tries to take those and gets run over. That's because you're not waiting enough for the change in behavior. You got to let it happen. Here's another example of that exact same thing happening, but it happens on the open 5A. They tried to bid it up, and the buyers just got crushed by the sellers. Look at that behavior. This is a perfect example of an open 5A. Again, just purely looking at the momentum. So let's go back to the process again. If you get whichever one of these is going on at this instant right, then the next step is to go down into these. So let's just assume you can all do that, and let's talk about these. And I'm going to do that after I couple more questions. We're at an hour and a half already, and I promise Lee these won't be longer than 2 hours so that we don't blow our quota. So I'll do the best I can. If we have to add a session at the end next time, we'll do it. All right, so let me just look back through the Q&A and catch myself up. So Christine, that's the answer. It takes a lot of practice. You're teaching yourself a pattern recognition skill real time. Think about that in any other profession. You know, a surgeon spends 12 years before they go near anybody on their own, really. I mean, sure, there's supervision, and yeah, they do minor surgery on their own, but you get what I mean. All right. Yes, ranges are critical, not price points, David. That's absolutely critical. And if you turn off the prices on your charts in the dome and just look at the areas that it consolidates, that will break you of the habit of thinking in prices. It is a jarring transition, Matthew, but it's the one that takes you from being you know, a student of Furu to being a trader. Lee's comment, you have to focus on a handful. Absolutely. Totally agree with that. The clinic based on trade setups on market structure is a really good background for understanding my setups. And I'm going to pause here for a second. Christine, what Lee said to you, I'll read it. Focus on a handful of setups based on market structure. Okay, what's the difference between what I do and what Lee does? Well, we do the same thing, but the difference is that I look at market structure as context for the pattern recognition that I do in all of my setups, my opportunities here. For example, my first hour high low and Lee's AB period trade, those are really similar trades. It's just the way that I look at it is a little bit different. I'm looking for a pattern at that price point. Lee's looking at the market structure. I will use the market structure as part of the pattern that I'm looking for. And that's why I say in this document that that the wave volume and the auction structure are key for me. Lee isn't looking at the wave volume. He's letting the wave volume present itself in the auction structure. And that's a subtle but important difference. And so for me and for Lee, the thing we're both doing is we're both in wait mode on that setup, and we're watching that inflection point, and we're saying, okay, if the price action at that inflection point is the way we want to see it, and again, what Lee's looking to see and what I'm looking to see are slightly different, but they're measuring more or less the same idea. Then we're going to fade that edge, and we're going to look for it to move back to the other end of the range, or at least to the middle is what, you know, I look for outside in, and sometimes I look for outside to, you know, edge to edge. And in fact, that's one of the reasons that I broke that out into a completely different setup. Because for me, the first hour high and low is really an inflection point, and the edge to edge range trade, the first hour high to the first hour low, or the AB period trade of Lee's, is really more of a range behavior than it is a first hour high low behavior. It's like the first hour high low energy is exhausted, and now we're just gonna, you know, plutz around for the rest of the period, the rest of the session. Okay, so let me look at a few more questions, and then I will go into all. I'm gonna, you know what I'm gonna do? No, he doesn't. Oh gosh. Okay, I'm gonna go through all the setups real fast, and then I'm gonna go into more detail because there's some misconceptions and things here. Okay, so let's see. Pete, Dimitri says Pete calls it the volume spike trade. No, that is not the same trade, Dimitri. I am familiar with Pete's volume spike trade, and he explains it that way because he's showing it on the Auction Vista heat map in Jigsaw. And so it's the same idea, but the way Pete measures it is different than me. I'm looking at the reversal, and Pete's looking at the map, the book map, really. He's, you know, that's different product, but he's looking at the order flow book and where the buyers and sellers are before and after that event. And it's really the same idea, but we're doing it slightly differently. I hope that makes sense, Dimitri. Because what Pete describes is primarily a trade that goes off of those circles that Auction Vista heat map creates, and those are volume inflection points. All right, so let me zip through the rest of the questions, and then we'll go through and we'll just describe all the setups. Okay, Open 5A takes a tremendous amount of skill. Matthew. You said that. And the reason it does is because you have to just do it or not. You can't think. Your reaction has to be immediate. You have to take profits instantly. You know, it's the epitome of a discretionary trading setup. But having said that, it's the most consistent way to make $500 or $1,000 in 15 minutes in the market that I know of. I've been doing that trade in one form or another my entire life. It used to be called the 2 and 2 when I did Dr. Jeff's day trade clinic in the 90s. It was 2 points in 2 minutes is what I used to call it. And I used to enter it right before the open in those days because I would use the tape right before the open to game it. And remember, this is before order flow. So anyway, okay. Good comments, good comments. Pete's volume spike trade is not necessarily Clay, but that's where he looks for it. Yes, he does do it in the ES as well. He's put up charts of it in the NQ, but he always likes to say that it's not his cuppa, which is British for not his cup of tea. Pete is more of a slow, deliberate kind of a trader, more like Lee. That must be a British thing, you know. Okay, let's see. Just the rest of the questions. Michael, which of my setups would I say is similar? It's HMOMO and HV reversal, Michael. I break that trade into two different trades because Pete's belief, and so is Axia's, that the HMOMO trade happens too fast and you can't join it. They always tell people if you weren't already in the HMOMO trade, you have to wait for the reversal trade. And in fact, Brannigan says that all the time. And I could not disagree with him more. As a rookie, it's very hard to join momentum. But as a professional discretionary trader, it's a cakewalk. You just have to learn how to see it. And the way I teach it is with really fast charts, like, you know, LRC's on a 5-second chart. And I think the reason that Brannigan's approach doesn't, you know, and I would agree with him for, you know, an order book dome only approach, it's too hard to see if you're new. But if you do the chart to dome, you know, boot camp kind of approach to it, well, there's one right there. I think that's eminently tradable. You know, here, I'll give you a really granular example. We'll go back and look at 5:30 a.m. on Friday on a 5-second chart. Okay. And again, when I say stuff like this, I'm not saying it to say, you know, oh, Jeff's right and Brannigan's wrong. And that's not. I'm saying that I have a technique that makes me able to do that. So if someone tells me that it's not possible, I say, you're full of shit. If somebody tells me it's hard or that the way they do it, you know, all right, that's possible. But it's actually a lot easier than you would think if you just learn to, you know what, let's get the scroll bars here. I normally turn them off. But let's get them. It'll be easier for this particular example. And, you know, I think these things are eminently tradable, but, you know, I do think it takes an amount of skill. And, all right, so it was 5:30. And so, hang on. Okay. So, boy, you can see people getting ready for it by watching these delta bars. It's pretty interesting. And then the announcement, watch the time on the bottom of my chart here. And then the announcement is right. Hello. Who in their right mind would say that that is not tradable? That's infinitely tradable. Why? Because as soon as it broke out of that range, this is my open 5 setup or my HMOMO setup. Get in with a market order, get a stop between you and your market order and ride it till it stops and then get out instantly with another market order. You're telling me you couldn't have traded that? Come on. These are 5-second bars. 5, 10, 15. Okay, so the trade starts and you have 15 seconds before the real tell-all bar comes up with 2 very strong delta buy actions right there. That was your clue. And then, okay, let's say you missed the big buy bar. You got a pullback opportunity to get it again at 07 there. And look at the delta. I mean, it was so obvious that was happening. I mean, I say that from my point of view, but this is why, you know, Brannigan said, well, no, you're going to miss the move. Nonsense. You can catch it. You just have to not think that it's over on that first bar. You have to get a really fast chart, and you've got to look for a tradable spring entry pullback. Then it's tradable. So, I'd love for, a Brannigan or somebody like that to, to come on and show their methodology. And, at some point, maybe we'll invite them. I guess they would probably consider themselves a competitor to us. So I don't know if they would or not, but whatever. All right, so let's see what the questions are. So did I answer your question and do you get it? Did that make sense? Does everyone see that there is a trade there? You just have to learn how to look, where to look. Yeah, what Amy's saying is a great comment. She's saying, Christine, you can pick IPs randomly. Just eliminate the ones that don't work, that aren't predictable and repeatable. That's so true. And so let's go through the setups, okay? So assuming you nail down what's happening and understand it changes really fast. You can go from ebb and flow range, like I just showed you, to an HMOMO event really quickly. And if it does that, you've got to just learn to go with it, or watch it for an opportunity to join it or fade it. So assuming you get that right, and you have the price action right, and if the market's open, you're mindful of the pace of the tape. Here's the things that I look for. Okay, these are the setup opportunities, and we'll zip through these. I will core dump on a few of them, and then we'll take some more questions and pick up on them where they left off next week. First of all, any and all of these can occur at the same time. Nothing is mutually exclusive. They're color-coded by whether they're scalp mode or wait mode events, but that assumes that you understand that every trade is a scalp unless it proves otherwise. So I don't enter a wait mode trade thinking that I'm not gonna scalp out of it if it goes against me. What I mean when I say it's a wait mode is that I'm going to enter that trade with the idea that if it doesn't work, I'm going to bail out, but I'm going to give it more time, and I'm not going to be as quick to dismiss it in terms of price action, because I'm not looking at very fast price action. I'm looking at the price action over a period of time at an inflection point. And I've shown you a couple of different examples of that. Where, if you're just watching the instantaneous behavior, you might be misled. But if you watch, like this kind of stuff, but if you're watching the minute range, which, is this approach, and you let the inflection points kind of develop a little bit, you will get much better information. So, this is an example of what happened Friday. And you know what? Let's do this with I need 2 more days to make this example work. Okay, so this is Friday again. And remember what I was saying about this overnight high right here. So that was the overnight high. Or it's the previous day high, depending on where we are in the session. And it just draws that green line on my chart, and the low draws a red line. And so you see what I mean right here? Whenever there's an inflection point, what Amy was saying is really good stuff to understand, Christine. They define themselves around the places I like. And do I need this green line on my chart to tell me that? No. But what I have found is that the ones that are the most reliable are the open 5, the opening 60, or the initial balance, or the first hour high and low, the blue one, then the overnight high and low of the previous day or session. And that's it. Those are the inflection points I watch. I don't watch any others, although I do watch some market profile stuff around the volume profile, but those are not constructed that way. They're constructed based on the volume. So we'll talk about some of that as we get to it. So HMOMO, again, I'm just going to zip through them all really fast once, and then we'll come back. HMOMO is simply a setup. It's not the price action. Understand the distinction. That's why I made this high MOMO. In other words, high momentum, using the definition we have, which is the price is going one direction. It may be doing it fast or slow, but it's undeniably going in one direction. That's the definition of high momentum. Okay, and then the HMOMO trade is a trade typically that does that kind of explosively, or it leaves a consolidation area, or it leaves an ebb and flow area, okay? So the price action it occurs under is HMOMO. High MOMO happens when there's HMOMO, and HMOMO happens when there's high momentum, okay? But don't get married into thinking it's the kind of high momentum you see just at the open 5. High momentum can be there overnight. It just looks a little different. And you just have to learn how to see it. So that's an important distinction, that it can occur anytime. And you'll recognize that if you're watching a chart of the overnight and you get high momentum, here was a classic example that I was just showing you, with these consolidations. Oh shoot, that's the showing today. Sorry, wrong chart. It's the problem with charts. You can pick a chart that does anything. If you learn not to use the charts, it's much easier. All right, so this is a good example of it, like we were talking about. So I'll leave that one up there. Okay, so this event can occur anytime, and it's often unexpected. And that was exactly what happened, at 5:30 when that news came out right there. It was expected only because of the time of day that it was. But oftentimes there's news, that's political or whatnot that happens overnight. And so you just have to be prepared to handle it. And, it's usually pretty obvious when you get it, as long as you're paying attention. Okay, never fade high momentum. If you're going to fade or go against a high momentum trade, you have to wait for a high volume reversal or, Pete's situation. And you have to use market orders here. It's just not worth it trying to save a tick or two. I've found that even if I just try to click on the bid or the ask to get a fill, that sometimes I can't do it fast enough. Or, hit the buy or sell the, buy the bid, sell the whatever. Just hit the market order. Don't outsmart yourself. If it truly is an H momentum trade, a tick's not going to hurt you. Okay, open 5A. This is the classic. It's actually my favorite setup, simply because it happens literally every day. And almost every day it's tradable. There's some days it isn't, but when you get an open 5 like this one, this is Thursday. I mean, you count your lucky stars, and you pray to whoever you pray to, and you put an extra $5 or $50 in the collection plate because you got really lucky. Because the open 5, when it telegraphs a setup like this, head fake up, overwhelming selling, and all you have to do is short and hold on for the ride down. They just don't get much better than that. Now, of course, this is 5 minutes, but again, this is why you'll hear me say over and over and over again, the education is on the faster time frames, not the slower ones. If you're looking for setup, zooming out is the wrong answer. Zooming in is the right answer. So here's that spot right here, and let's stretch it out. Sorry. Okay, that's what I was trying to do. Okay, so trying to get to exactly the spot I want, which is really hard. You know what? Let's just pick another example. It's when you go back too many days, it's too hard. Okay, so there's a really good way to see what happened even Friday. Another good one, and the importance of not having a bias, because you had a great open 5 short, which turned into a first hour low long, but it didn't. That wasn't the end of the first hour. Look what the timestamp is there. That's 6:30. And does that mean you have to wait for the first hour? No, not necessarily, but you're looking at the change in behavior, and look at the retests of that. Those were really your opportunities there. That one, you would have had to predict the future a little bit too much, but this one would have said to you, okay, we sold off heavily, great short, we came right back up to the highs, then we established a range. So I'm thinking, any low down here that doesn't get sold, I'm a buyer of. That's the way I would interpret that. And so what that is ebb and flow range. That's when, it can occur anytime. It's less reliable overnight, but you're looking for that, back and forth dance, the 8 tick, the 8-point dance. You're looking at where the liquidity providers are. And so that would have been a good example of that trade, is just to, buy the low of that and sell the high of it. And if you were doing that, you would have been in a position where you were long coming up into the first hour high right here. And that actually is where the first hour actually painted. So look, this was the open, all right? And then let's find 7:30 on my chart. It's right there. So that's the actual end of the first hour, but that low, in fact, held. So at this point, that's the open 5B. This is what we mean by the open 5B. We have seen the range that was established at the open 5A, and tests of it we want to treat like we treat tests of the first hour lower high. Okay, so that's the open 5B setup or the first hour high setup. They typically occur together, and that's this one right here. Okay, so let's unhighlight all this and let's look at one at a time. So we've seen HMOMO over and over again. We've seen the open 5A over and over again. And in both of those, you know, one open 5A is almost a form of HMOMO. So again, it's market orders in, you know, you want to look for high volume nodes to do it. You never fade it. You always want to have a stop between your entry and the current trade. The open 5, the only distinction about it is it occurs only at one time of the day, which is right here. The regular trading hours, the open 5 minutes. Sit on your hands if it's not clearly one way. And, you know, a really good example of that was right here. That's clearly one way right there. That's what we refer to as the head fake. And there's often one of those. So that's a really good example of that setup. So if you go back and you look at this, this, and this. So let's just take this and throw it all together. Okay, so right now, let's just talk about this. HMOMO, when price leaves an ebb and flow area aggressively, that's HMOMO. It's an opportunity. It often leads to an opportunity of a high volume reversal. Okay, those are typically news driven. That's a good example of the Pete Davies volume trade. That's usually what he's talking about. And it tends to occur in oil and gold a lot, so whoever said that is correct. But if you take just these four together, you have a really good, lean, efficient trading system that only is concerned with the opening of regular trading hours, the behavior of market structure around that opening, and then any extraordinary events at any other time of the day. And if I were you and I were a new trader and I was looking to put a playbook together, this is what I would do right here. And so basically, you would have two scalp mode setups, the HMOMO and the open 5, and then the flip, let's leave that out of it right now. But oftentimes a flip occurs with that. I'll come back to it. But you would have one really nice wait mode setup there, you know, and you could see a perfect example of that playing out would have been here or here or here again or here again. I mean, this setup plays out over and over throughout the day, as long as you're mindful of those inflection points. And they're price oriented, but it's not the price point there that you want to be mindful of. So you don't want to say, oh, I'm going to buy or sell, you know, 28.96. It's the range around there. You know, that might come all the way down to 28.90 before it reverses. So if you're not watching the price action when you're seeing this, you're going to miss half the picture. So that's an important consideration there too. So if we just look at those together and throw in high volume reversal, you've got a really neat little trading playbook. So here, let me highlight it this way so it doesn't screw up the colors for the modes. And we'll pause and we'll talk about those. So I want to make sure you guys understand these setups at least well enough for the purposes of this conversation before we talk about any of the others, because all of the others are more complicated to execute. These are all pure price action based order flow market structure setups, and they don't require any knowledge of Wyckoff or Springs or wave volume or anything else, although wave volume can be useful for gaming this one. But if you're watching order flow on the dome, you would see the same thing. Okay, with having said that, I am going to do two things. I'm going to go reheat my coffee while you guys can post questions, and I'll let Lee moderate for a second while I'm gone, and then I'll be gone like maybe a minute, and then I'm going to take questions about these four setups or anything about the structure of the playbook and flowing through this funnel. And again, I define this as a funnel because you're funneling your way down through the context, mindful of the price action into the opportunities that those things are creating for you. Okay? And I will leave that at that. Go get my coffee and I will be right back. Okay, so Amy's got a good comment there. So Lee, if you could handle everything, and I'll be right back.
Okay, so I'm just going to have a look at a couple of these questions. So David is asking, he's wondering if we can measure the difference or aggression of buyers or sellers in a range to see if it's possible to determine which side can and will break first. I would say it's not about the aggression that's going to determine what's going to break first. So if you're looking at this on a chart with some delta underneath it, then you're going to get a sense of the aggression by looking at the shape of the delta through that range, because the horizontal chart, the trading over time, is going to give you an idea if there's a defined increase or decrease. But I think you really want to be qualifying the footprint at the edges of that range, David, to look for signs as to whether it's going to break. So it's not the aggression on its own, it's the aggression relative to the limit orders that's going to be your clue as to which side will break. So there I'd say go and study my logic on the B to A trades and on the AB to initial balance and how we qualify edges. You've got to qualify the edges of the range. It's not only about the aggression. Clay is asking, Amy, do you discuss your specific 2 or 3 setups you do in your video for new peeps? Actually, it only played out on Thursday, Clay, so why not watch it? It's there in the library, and you can hear all about Amy's approach firsthand. So, Amy is all about taking one ticks based on her Goldilocks setups of the coincidence of LRCs and then looking for tails in the order flow, and that's what she does, and she talks through how she's got there and the ways to do it. Back to the previous question, David's asking delta by bar cumulative. They're showing the same thing, David, but in different ways. So first up, understand the relationship between bar delta and cumulative delta, and we've gone through this in various clinics. I'm sure on the Zell's deep dive. And then you'll see, but you are looking at shape. That's only showing you aggression. Amy is saying to David, so try not to think in terms of trying to predict its direction, but how you're going to trade it if it does this. I'm wrong. Yeah, but spot on, Amy. You're thinking about what could happen in this area. What is my likely plan? How do I know my plan is wrong? Michael, are you going to share tells we can look for on the dome or footprint for each setup? I'm presuming this is relating to the setups which Jeff is talking to, and similar questions, James. We'll wait for Jeff to come back on that. David, I'd like to discuss this, so I'm not sure how to type my words. Not trying to predict range per se, but determining delta like Lee said, who has the favor and inferring it. No, David, listen very carefully to what I'm saying, which is you need to qualify the edges. You are not going to be able to qualify the edges based upon reading the delta of what's happening through the range. You've got to read what's happening in the volume at the edges of the range. So review the clinic on the B to A and the AB to IB, and look very carefully at how I'm saying about qualifying the edges. Detach yourself from the delta and the aggression. LRC, James and Clay, this is in our glossary, linear regression channels. It's part of the bootcamp Delta Deep Dive. We go into this a lot. So it is a quick way of determining the short-term range of price over a defined period. Michael, I will probably do a session next Thursday. I will put that in the calendar.
I am back, but you're doing a great job, so I'm just listening.
Cool. I feel like I'm shooting at lots of moving targets. I'm
These
playing
are
Space
LRCs.
Invaders when it's getting fast.
Yeah, exactly. Space Invaders, like dum 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 dum. That music. That was so genius, putting that music in and having it speed up.
Yeah, fantastic. Yeah, like heartbeat.
Yeah, exactly.
What has Joseph said? In the latest chart book I shared with the DOM similar to Jeff, what number video would explain clearly how to interpret the column data as set up and as it goes by? The entire 2019 order flow workshop, Joseph. If you want to understand the mechanics behind Jeff's domes and the whats and the whys, you need to go through the 2019 workshop.
Yep. And even though it looks a little different there because it's Ninja 7, you really do. You know, we don't say that. Look, when you guys watch those videos, it's not pay-per-view. We don't make more money if you watch them. Yet we say this over and over again. If you're new, do nothing but watch the first 28 videos with a notebook more than once.
And you know, if it takes a month, that's only $3 a video.
Yeah, exactly. And, you know, there's all kinds of different nuggets of information in there that you'll absorb, and some of it won't make sense until you've watched it, you know, again next summer. All right. So I didn't hear the first part of you answering questions, but I heard most of it, Lee, I think. Let's go back to, unless there's any outstanding question I need to address, let's go back to these 4 setups. So was there anything left over standing for me in the questions while I was gone?
Just a couple of questions from Michael and also James, just asking, will there be deep dives on these 4 setups?
Well, this is the deep dive, but today and next week, we're deep diving to the extent that there's a deep dive. You know, one of the things about what I do that is really important to understand is that think about like the iPhone and what Stephen Jobs said, okay? It's about getting to simple is really hard. But when you get there, you can move a mountain. That's literally what he said. And it's a key part of my thinking. I think I posted in here, but I think the last time I looked for it, it wasn't here. So let me just repost it in case I did that same thing last time. I remember the same conversation. So hang on one second. And this is a key point about this whole conversation. So where's the Steve one? Oh, there it is. Okay. So this is a really important point, that what I do in my trading setups is the result of this idea, living this idea for the last, and I'm not exaggerating, for the last 5 years of order flow, trading, training, and my own discovery and testing, with hundreds of thousands of real money live trades. So what I'm presenting to you is the result of that. So when we're looking at the process and the question comes up like that, I say to myself, it won't make sense until you can at least get an idea what you don't know. And so that's what I would encourage you all to do, you know, with respect to the idea of watching all the videos or about these order flow setups and about my way of looking at it. I am taking into account everything that Lee's talking about and the idea of market structure. And I heard a bit of a question while I was gone about looking at the bar by bar delta, which I've got down here, versus the cumulative delta and all that. And the answer to all of those things is the same. It's about finding ways to get that information into your brain and organizing it so you can execute against it. So if you can just focus on what you're seeing and the behavior of what you're seeing and not put any other structural definitions on it, you will be so much farther ahead. And a really good example of all right, there's a good question here. Let me take this question, then I'm going to come back to this notion here in a minute. So Bar said to me, could I clarify what CT means on a flip setup and on the range setup? Okay, yes, I will when I get down there. But it's counter trend is what that means. When I use the word counter trend or the word fade, those mean the same thing. So those are relevant to these setups, and that's why I'm explaining and I'm answering your question. Never fade or go counter trend to H momentum. What you're doing is you're saying, I'm smarter than the market. I know when the momentum is going to stop. And if you're saying that, you're an idiot, okay? Because there's no way to know that. There's no indicator, there's no black box, okay? So the rule number one of any high momentum setup is to simply go with the momentum and protect yourself from being wrong. That's why the stop goes between your entry and the market. And that way you can protect whatever profit you have. But there's literally nothing more to it than that. So if you spend a lot of time, trying to come up with technical explanations, well, HMOMO occurs when the volume going up is more than 175% of the, trust me guys, I spent years doing that, trying to come up with the appropriate formula and, what moving average matters. And, is there a magic ratio of the delta up to the delta down, like when I see this kind of behavior right here? And guess what? The answer is no. There's no magic formula. That's all nonsense. I knew that coming into order flow, coming from technical analysis. But I was not an order flow expert. I learned from the experts. I learned from Pete, and I learned from Grady, and I learned from Axia, and I learned from everybody I could find out there. And I said to myself, you know what? Some of this is right, and some of it isn't. And you need to put yourself in a position to do the same thing. Okay. Yeah, Joey's saying, could I give you a paint by number setup? And if I can, it's my setup, not yours. Exactly. And also, it's not paint by numbers. It's fill in all the colors, but do it in context of the market. It's not step 1, step 2, step 3. It's step everything a little at a time, depending on what's going on. And so it's really important. Thank you, Joe. It's really important to figure out your own ways of doing this. But here's a bunch of examples. I literally can just put up a chart like this, guys. And again, I'm not exaggerating or saying I'm so smart. I'm saying that this material gives me an edge over and over again. Okay, here's one right now. What is this right here? What's occurring right there? 4 of my setups are all occurring at once. Anybody want to take a shot at which 4? Let's see, okay? Okay, so what's going on right there? Do we have HMOMO? Well, obviously we do. We have it in both directions. We have an edge as well. We're at the edge of this bump in the volume. And there's a low volume node right there that is getting bought. So that's significant. So we have HMOMO. Do we have the open 5A? No, it's down here. It's the pink. Do we have the first hour high and low? We're above it and it's been bought. So yes, we do. We have a bullish interpretation of the open of the first hour high, and the auction structure and the wave volume both are telling me that people are buying the first hour high and that we are going to be above it. And I'm seeing that. You can see that there's everything about this, the cumulative delta, the bar by bar delta, literally everything about that picture tells you that story. Okay, what else are we seeing there? It's definitely not a flip. That's an overnight trade. We'll come back to that. Is there an HV reversal? Yeah, there's 2 of them. So only one real good one, but there was another little one right there. So springs and up thrusts, yeah, you're seeing springs away from this area, which is typical. When you have a high volume reversal and H momentum or HMOMO away from that in the direction of whatever trend is occurring, then that very typically is where you will see a spring as well. So this setup, again, when I just threw that chart up there, I said to myself, well, heck, from my trading point of view, I could look at that behavior knowing nothing about anything going on in the markets other than that moment right at the close. And I could say, I could do any one of the 4 of these and make money. So there you go. Yeah, Nate, you got it. Spring, HMOMO, edge, high volume reversal. It's all of them. It's also the market on close setup, which used to be in my process. If you look at old versions of this image, you'll see in the notes over here, MOC, which is a specific setup to trade the close, which it's part of the others. Now I don't use it anymore as itself. Excuse me, it's part of HMOMO. and E and F range for me, so I don't do it anymore. Okay, flip. We've seen a bunch of examples of flip. If you want to see great flips, just go to the Slack, go to JM Flip. I've posted a half a dozen of them there in the last 2 weeks. And I even went so far as to be predictive. I say, you know, looking at a probable or possible overnight flip setup here, you know, that's literally me showing you how I think that one might be coming and why I think it. And then when we got it, I try very hard not to say I told you so several times. So that one is there. And spring and upthrust, we've talked about, we'll come back to that one. That's really just a one chart setup. You know, if you want to be a 5-minute chart trader or a 1-minute chart trader or a 30-second chart trader, then you should be looking at springs and upthrusts. It's a real consistent way to make money. And then these three, I'm not going to go into any more detail about until next Saturday, given the time and where we are right now. But I will say this, my old processes, range and edge, was one setup just called edge, and then I kind of broke it into edge to edge and edge ledge, and finally I realized it's three, and that's how we got here to these three. And it's just really three different interpretations of the same idea based on different times of day or different price action considerations. And that's why I broke it into three, because depending on the time of day and depending on the price action, you have to trade it differently. Anita, are you listening? I'm answering your question about why the session ledge trade sometimes is a bad trade for you and sometimes isn't. You need to master this right here. If you do that, you will be able to answer that yourself. Okay, we're gonna end there. I'm not ending as in, you know, I'm out of here, but we're gonna stop with material and I'm gonna go to questions or comments and see where we're at. Okay, David, can I discuss how to interpret news of the Fed? I don't interpret news. Couldn't care less. The Fed injecting billions is likely to take prices up, and it's also likely to take prices up for the reason of just the money has no place else to go. But beyond that, I don't predict direction. I just trade what's happening. Those discussions about the Fed and don't fight the Fed, you know, and all that crap, it's a waste of energy. Why? Okay, Rico, murder on close. Yes, the market on close trade is very hard if you don't know how to do it. The trick is to look for a lot of momentum in one direction right at the close and then wait for those guys to start taking profits. So you go with them when they're making money, and then as soon as those guys start taking profits, you some days have a reversal trade, but most days that's the key to get out of the way. So an example of that at the close Friday is right here. It's a really good example. You know, this is where we were, right? 21.75, and there's literally what, 3 minutes left, 4 minutes left, and we'd had one little spike up to what, like 96, and that got sold immediately. And it's a wick on this chart, right? So if I'm watching this behavior, I'm immediately long on any kind of energy to the long side or any pullback that gets bought. I want to be long. And then after that, I want to be short. Why do I want to be long? Because the guys that are shorting this are going to have to take profits. They're going to have to cover. It's Friday. They're not going to do it on Sunday. They're going to cover at the close. The close for the futures is a long time from the close of the NYSE. So this is a cool little setup, and oftentimes it will do what you see this one do. And what was that? Well, let's watch it and see. Okay, so there they are. Okay, the shorts are trying to, you know, take profits, and then it's getting sold into. So that's the kind of behavior you want to be long until that stops. And you know, it got a couple of good pops, took out the high, took the session to a ledge. You know, this is just long firing on all cylinders right now. And then we had the session ended right there. That's, you know, the future session. So these guys got to take profits here. So, you know, you could throw a little short up there and just, you know, go with the drift, because anybody they have to take profits. You just want to make sure you don't get caught in the trade. And so that's what I was talking about. This is a very professional high-end trade. This is not a trade for newbies to try. But, look what happens. It drifts along. And this one actually closed on a high. They got the shorts, right? So that'll happen too. But you could have made money doing this right here, Okay, questions, comments, let's see. Yes, it's not the TRG slogan that all charts are wrong, Michael Glass. It's the truth that all charts are wrong. If you bring in a chart trader and tell me, and they're gonna show you a chart that proves some setup that they have, I'll find a chart that shows the opposite. And if you show me a chart that shows the opposite, I'll find you a chart that shows the truth. Charts don't prove anything except given the parameters of the chart, the range, the type of chart it is, you'll be able to make a case. Look, if I go back 5 years, I can make a great case for a V bottom right now, easily. But I think that's a really stupid trade to be just, buying dips. That worked 5 years ago. It's not gonna work now. All right, other questions, let's see. Michael, I get that you don't want to do a step-by-step paint by the numbers. No, it's not a happy medium. Again, you're stuck you're not using the tabula rasa. It's two completely different approaches. It's not placating people that want step-by-step. It's teaching people that want step-by-step that there is no step-by-step. I hope that makes sense, Michael. No, we're not only showing charts and saying it's the deep dive. In a deep dive, we show all different levels of something. I showed you the deep dive recording of what Lee did, Michael, and said there was a deep dive on why prices move. And that entire lecture and recording video is based on bid-ask behavior and has nothing to do with charts. There are no charts in that session. So what you're saying is just simply not accurate. And I know you're new and I don't want to be hard on you, but what you're saying, you're not looking around yet. You need to do more looking around. A deep dive is when we really get granular, and this is by no means a deep dive of anything. I'm introducing you to trading opportunity setups. Oh gosh, what I said, and now I'm getting frustrated. What I said was, next thing we're gonna do is try to do a deep dive on the trading setups. However, I also said, and I would encourage you strongly to go listen to the recording, that there are multiple layers of this. And if you don't watch it 1, 2, 3, 5 times over 2 or 3 or 6 months or 2 years, you will not absorb it because you will not understand the nature of layers. I said that very, very specifically. Okay, here's what I'm gonna do. If you wanna debate with me about what I said, I'm gonna say thank you for being here and show you the door. Because this isn't a conversation about what I said and didn't said, it's about what you learn. Okay, and if you wanna just debate with me about what I said, I'm just not interested in having that. Okay, are there any other questions or comments about the material itself? Any burning desires? Going once, going twice. Crickets. Okay, Michael, if you would like, I will open a private room and you can be free to tell me all about what I said and didn't say. Let me know if you'd like me to do that. Lee, I have nothing else to add. If you want to wrap us up, I'd appreciate it.
Cool. Well, thanks for that, Jeff. That pretty much wraps up the session. Recording will be up, close of play tomorrow at some point. We'll have Ides of Monday on Monday, and watch the calendar because I will schedule a Let's Watch Lee examine the initial balance some point in the week, Wednesday, probably Thursday. But other than that, enjoy your rest of your weekend.